Good evening, guys. Welcome back to today's class. I'm happy to see you all today. All right. So let me connect to your chat box now. Just give me a moment. So hope you guys are doing good. Yes. And you guys studied, revised. Yes. Hope. Oh. All right. I connected to your chat box. I think I started early, is it? A minute, I believe. Because to avoid that time lag, I thought if I start streaming little 1 minute earlier, so then I can avoid this time lag, I thought. Let me see how it goes today. All right. Okay. Just kept it. Okay, we'll start then. So, I think we weekly twice we are meeting, and it goes on till your exams, maybe Feb and March. And here, like one class will be for weekly, like a Tuesday would be for say numericals, and a Thursday would be for concept building. That was the schedule given to you, I guess. But understand, I cannot say I cannot go like Thursday only concept building and next Tuesday immediately new. If that is not completed within the Thursday, obviously I have to go to the next class. You're getting it? So I don't think I can strictly follow that this class is numerical, this class is that one. I can't do that. But one thing I'll assure you, numericals will be there. It's not only always theoretical concept. It's not like that. We'll be doing numericals. You're getting it? Even because just now we started with the syllabus. Now cash flow is one of your chapter. So in that, we will be doing numericals, we'll be solving some MCQs based on that concept building. See, once your concept is clear, then I don't think any number of questions you will get that is easy. Correct? No, you don't feel that is new. Correct? No, when your concept is clear, whatever the number of questions you do, that is pretty simple. Correct? So that's what I was wanted to say. So last class, I think we have seen the cash flows, and in that I've done with investing and financing activity. So just a quick recap, because after this I have I have slides for the numericals. Okay. So let me give a quick recap of this. So investing and financing, I said, when an organization put money or purchase any assets or sell any assets, and any revenue generated out of those assets will be coming under investing activity. And financing activity, any organization who does any transaction to raise funds or to repay that funds while rising. Suppose I borrowed money to increase my funds. Now I have to repay. Correct. Now, so it's a subsequent transaction. It is a later on transaction because of that rising funds. You're getting it? And then any inflow or outflow arising out of such transaction will be coming under financing activity. I told you, I think I have dictated you the items also, I believe. Issue of share capital, issue of debentures, borrowing of loans from banks, your OD facilities, and then repayment of loans, and then redemption of shares, redemption of debentures, interest paid on debentures, dividend paid on shares, interest paid on secured loans. So all those things will be coming under financing activity. Why? Because these things lead to these activities, this transaction what I made that helped me to raise funds. You're getting it? So any activity, any transaction which helps you to raise funds, which helps you to raise money, then that activity will be classified under financing. So these two things you know. Why? Because there is a minute difference between investing and financing. Why? Because dividend received is investing. Dividend paid is financing. Remember that. Interest received, investing. Interest paid, financing. All right. So remember these differences. Now coming back to our own hero, that is operating activities. We never talked about this. What is it? Every day in day out, for your regular course of your business, whatever you do, that will be coming under operating expenses. Here, why? See, all the activities, guys, like, salaries paid, purchases, sales, sale of goods, sale of services, and then discount received, discount pay given, what I can say, electricity bill, rental paid. You name it, every day, all these, all your business expenses, business inflows, everyday regular activity, that will be coming under operating. But what happens, there is there is no way to find out exactly like what is your inflow or outflow from operating activities. Why? Because there are so many things involved. Investing and finance is a straight case. Investing and finance is a straight case. There is no problem, only these items will come. But when it comes to operating, we will be arriving at via net profit most of the times. So there is a way how to calculate your net cash flow from operating activities. There are two methods, direct and indirect method. We will see both. What is meant by direct, what is meant by indirect. We'll see both. You are not going to solve entire sum like, how to find out the entire, no. So, but you should know, because in India, we will be following AS3 recommends, they say you can follow both, but AS3, especially Accounting Standard 3 and the Companies Act, mentions that please prepare your cash flow in indirect method. Okay, your operational activity should be prepared in indirect method. All right, so we'll see both. What is it? All right, so remember this now. Whatever related to your regular activity, regular day-to-day business, normal course of your business will be coming under operating. Investing, financing, With this concept, we'll be going with few questions. Then we'll move ahead with, guys, investing, financing, nothing. That's it. Whatever I've told, that's it. Once I'm done with the numericals, we can go ahead with how to prepare cash flow from operating activities. Direct method, indirect method, what are all the items you have to be careful enough there, because there comes one concept called working capital, and there comes another concept called non-cash item, non-operational item. So many small concepts will be coming in there and coming in operating activities. You're getting it? That's the reason I kept it at the end. Now here I have given your examples here. You guys can, if you want, you guys take a screenshot or you can write down. So here I have given the answers also, or if you want, I'll just remove that because I've prepared it anyways. So purchase of machinery. So which activity it will come? Hi, okay, hi sir. All right. Now, purchase of machinery, it would be investing. Proceeds from issue of equity. So, shall I remove the answer so that you guys will be answering, or shall I just tell the answer itself? Because I don't see the regular guys who will be there. I don't think so they are there. Fine, let me give the answers also there. All right, purchase of machinery. Guys, understand it will be coming under investing. I already told you what will be coming under investing. Any asset that has been purchased by the organization or sold by the organization, and any revenue generated out of that asset would be coming under investment, right? So purchase of machinery will be coming under which activity? Yes, Deepak, are you there? All right, good. So investing. Next one, proceeds from issuance of equity share capital. So again, issuance of equity share capital means what? You are raising funds. You are going to public, you are raising funds. So which activity you will put? Financing. Cash sales. Obviously sale is my regular business activity. So where will you put that? I told you, whatever your regular business activity, everything will be grouping under operational activities, correct? So it would be operating. So long term borrowings, so guys, proceeds means you are raising, you're getting it. Proceeds means you're getting money out of it. That is called proceeds. Remember that. So proceeds from long-term borrowing. So borrowing means what you're doing. You are borrowing funds from bank or any other institutions, whatever it is. So what you're doing there, you're raising funds there. So what activity it is? Financing activity. Next one, proceeds from trade receivables. So circle this, trade receivable, this one. All right. Next one, these two you receive, you circle it. I'll explain how it will be operating later on. Why? Because we have two methods, if you remember, direct and indirect. Why this trade receivables or trade payables? Why? Because these will be coming under your current assets and current liabilities, where we will be talking about working capital. You're getting it? So these are all the concepts what I was telling earlier. So circle these two. We will be seeing this in the next class. You're getting it? Now next one, let me go. Trading commission received. Trading commission means it is my normal day-to-day activity I am doing. So on that I'm receiving commission. So which is nothing but operating cash flow. Purchase of investment. They only told investment. So obviously it is investing. Redemption of preference shares. Redemption means what? I have issued earlier. Now I am going to repay that and get back those shares. That is called redemption. So because of which activity? Earlier activity. Because of financing. You raised funds earlier. Now you are repaying it. So this will be coming under which activity? Financing activity. Cash purchases. Purchases, sales, all these things are operational every day in, day out. So it would be operating activities. Next one, profits from sale of investment. They themselves have given there. It is investment you sold. So again, it is an inflow under investing activity. Cash paid to the suppliers. Again, remember, suppliers means whom you are talking about. We are talking about our regular vendors who will be giving the goods for our business. Correct. No, here we are not raising funds. Please understand. Ma'am, there you said financing activity when I borrowed. Here suppliers I paid. So it is a kind of, credit only. No, please understand. There you are borrowing money. Here you are not borrowing money, suppliers. You are borrowing goods on credit. You say that, oh, you give me goods now, I'll pay you within 30 days. So tell me what activity it is. Purchase of goods, what activity it is? Operational activity. And because of that, later on, you are paying to your suppliers. Correct. So now what will happen whenever I meet the liability because of my what? Working capital, because of my regular business activity, those things will be coming under which one? Operational activity. So cash paid to the suppliers, cash received from debtors, everything will be coming under operational activity. Next, interim dividend paid on equity shares. I have already told dividend paid will be coming under financing. Why you are end up paying dividend is you raise funds from the people. So on that you are paying dividend. So the first former activity is raising funds. So which is nothing but financing. You are getting it? Wages and salaries paid. This is regular and recurring expenses which I am going to pay to my staff every month, which helps my business going, which is the day in, day out expenses. So obviously that will be coming under which activity? Operating activity. Now profits from sale of patents. Guys, understand patents, goodwill, and copyrights, all these are assets, basically intangible assets. So whenever there is an asset related item, you can go ahead with investment. If it is a purchase, it's an outflow. If it is a sale, it is an inflow. That's it. So patent, goodwill, copyright, all these things are intangible assets. Please remember that. All right. Interest received on debentures held as a investment. So what does it mean? Guys, here they have clearly given, I don't want this held as an investment and all. I don't want this unless otherwise I am a, I forgot. I gave you a homework, no? Correct. No, I gave you a homework last week. In the last class, I believe. I don't know how many of you attended last class here. I asked the difference between AMC, that is asset management companies, or mutual fund houses in companies, and other companies, because their main business itself is what? Investments. Their main business itself is what? Investments. So for them, whatever I say here, that will be an operational activity, because their main business itself is what? Portfolio. Correct? No. Buying and selling of shares. If I am a stockbroker, I am a share, I am a speculator, or I am an arbitrager, obviously my main business is what? Buying and selling of stocks. So that won't be my assets. So for me, those things will be coming under what? Dividend received as my regular income. Interest received as my regular income. You are getting it? So all these things depends upon the business what you do. You are getting it? Again, you keep that in mind. It depends upon the business what you do. If your business itself is something like, real estate, all right, real estate, and then if you're if you are a builder, for you sale of an asset is not, sale of an house is not a sale of asset. For you it is a stock in trade, na? I am a builder. Say I am Mantri, or I am a Purvankara. I sold 10 apartments. It's not my asset, na? It is my stock in trade. So for me, it will be coming under where? Operational. Correct. No, it is not under, you said house and all fixed assets. No, then obviously it will be coming under investing. No. So that's why I gave you that. If interest is applied on goods purchased, which activity? Operational. If you, this I told you that day. Interest, when you talk about interest, I'll go to that slide now. I thought let me go later. Since you guys asked now, let me go there. Just a minute. Special care itself I have given. Why I have given interest and dividend is it's based on your business. You are getting it? That's the reason I have given it under the special care. Please remember that. We'll see that slowly what is it. In the next upcoming classes, I'll be dealing with all these items, how it comes and where it will be shown and all those things. All right. Since you asked, I'll tell right away. Guys, understand, because of what is the former activity that has happened, what is leading to this particular transaction, based on that your bifurcation will change. You're getting it? So here he asked if interest is applied on goods purchased. Ma'am, why goods purchased they will apply interest? Understand, when I buy goods on credit, say for example, or I buy it on EMI, I buy it on EMI. Again, remember, when you buy it on EMI, is it an asset or is it a goods? Goods, though, it is a regular activity. Asset, though, again, it will be going under investment. Remember that. You are getting it? So here, I'm talking about goods. Since the question asked was goods, I'm going with goods. Suppose I purchase goods on credit from my vendor. Okay? I agreed to pay within 30 days. I couldn't pay within 30 days. Now that vendor will be charging me something extra. He will charge that you are supposed to pay 10,000 to me. You within 30 days, you didn't pay within 30 days. So I am charging you 1,000 rupees extra as a penalty or interest, whatever it is. Whatever name you want to call, you can call. Or interest, you keep it. So now please understand, where will you put this 1,000 rupees, extra 1,000 rupees? Now tell me, Is it a financing activity? Have you raised funds there? That 1,000 interest paid, is it happening because you raised funds? Is it an investment activity because you sold an asset, you purchased an asset? No. So because of what this transaction is happening, because I made a delay, or I delayed my payment to my vendor. So who is that vendor? My goods supplier. So what activity it is? Purchases. So it is an operational activity. You are getting it. So always it is like a technique, you can say. You have to see the former activity which is leading to the subsequent transaction. You're getting it. So when it comes to interest, dividend, royalty, when you talk about these kind of items, please go for your former activity. So former activity where you have classified. Have you classified under operational, financing, or investing? Same activity, you group it. You're getting it? Yes, Aishdeep, right? No, ma'am, for what? So that financing or investing, for that you answered, is it? All right. Now understood? You got your answer, Ishdeep? You got your answer? All right, good. Yes? Now, interest paid on long-term borrowings. Again, long-term borrowings is what? You are raising funds for financing. Office and administration, guys, telephone bill, electricity bill, water, rent, sub kuch, whatever is incurring towards my day-to-day running expenses, that will be coming under operational. Manufacturing overhead. Don't go by, these fancy words and all. Ma'am, overheads, ma'am. That simple. Overheads means in accountancy, I don't want to give it a separate name. It is a chunk of expenses. That's it, which is not directly related, but these expenses are very much required. That is called overhead. You're getting it. So it is nothing but operational. Every day in, day out, I will be incurring. So manufacturing overheads paid. Operational. Dividend received on shares. Guys, understand this, held as an investment. Held as an investment. This is further to make you clear those lines are given. Even if those lines are not given also, check whom you are. If you are a normal organization, normal company in the sense, what is your main business? What is your main purpose of your existence? Are you an investment company? Are you an AMC? Are you a mutual fund? Are you a banking company? If not, then all this dividend, rent, rental you leave, rent you need that clarification, dividend, interest, all those things will be coming either under investing or financing straight. Unless if it is because of the late payment of your suppliers. You're getting it. So remember that. Suppose if your main business itself is investment, main business itself is, trading of shares, main business itself is speculation, then in that case, all these things will be coming under operational activity. For a bank, interest paid is an operational activity, Baba. Correct, no? For a banking company, tell me that. For a banking company, they accepted deposits. Now on that they will pay interest. Correct, no? Correct, no? It is their normal course of business, no, Baba? Are you getting it? It is a normal course of their business. Yeah, and whatever the interest they received, it is their normal course of their business. For a banking company, the entire scenario changes. So it's based on your main course of activity. So usually they will give other than this banking and investments only, because for them their cash flow format itself is different. As per Companies Act, I'll tell you, Companies Act, even accounting standards, AS3, it clearly mentions that it is not applicable for banking, insurance, and electricity. You are getting it. Even Companies Act have told clearly that all companies in India except banking, electricity and insurance. These three companies, except these three companies, they have to maintain their books of accounts as per Companies Act 2013. Why, ma'am? Why these three are exempted or not? They are not supposed to prepare books. They are supposed to prepare books, but for them, for banking, they have a separate act called Banking Regulation Act, and for insurance, they have IRDA, Insurance Regulatory Development Authority. They have mentioned how to maintain their books of accounts. And electricity company also, they have a EB Act, and based on that, they have to prepare the books. Their books itself looks different. You are getting it? So you no need to worry about those stuffs, right? Now coming back. So I hope you guys got here. Selling and distribution expenses, fine. Here, circle this income tax paid. Income tax paid, you circle this. All right. Next, somebody asked me that day, does interest paid on long-term borrowings include short-term borrowings also? Short-term borrowings, if it is for your OD is what, Baba? Tell me. Is it long-term or short-term, OD? Long-term or short-term? Cash credit, OD. Tell me that. Come on, Ishte. OD means, you know what is meant by OD? Overdraft. Cash credit, you know. Short term. So what is it? What are you doing there? So what you are doing there? Okay. OD and cash credit means what? You are increasing your capability of your capacity of your money. Correct? No, you're increasing your money. Correct? No, not keeping some money with the bank. No. Say for example, you have a credit card, right? Even though you don't have money, you can swipe. So it is like a similar type. Bank OD is very much prior to your credit cards. Before introduction of credit cards, this OD and cash credits have been given to the business customers by the banks. What they said is, Baba, you maintain an account. In your account, you have 1,000, but I will allow you to do transaction for even more than 1,000 rupees. I am fine with it. I am giving you some credit. I'm giving you some credit, which is nothing but loan. Which is nothing but what? Loan. But here, what is the difference is, it is short term. Short term in the sense, OD and all will be paid every 90 days, every 30 days, every 60 days. So the period is very short. It is not like a long-term borrowing. It is very short term. So even OD, cash credit, everything will help you to increase your financing capacity. It will help you to increase your funding capacity. You're getting it? So these things will be coming under financing activity. Employees through their bank OD money. Yes, see, for to employees, it is salary or whatever they are receiving, bonus or whatever it is. See, suppose that's what I'm saying. If I don't have money here, what will I do? I cannot write, today I need money. Okay, today I need money. Say 1 crore rupees I need. Now, I cannot go and immediately I cannot raise funds. Correct? No. One day can you raise funds from the people? I'll go and issue shares. I'll go and issue debentures. Can I do? Obviously no. And I know that within 2 days I'll be getting that funds. So I need to manage that one day. In between that one day, I need to manage, because I know in the next third day I am going to get that money. Guys, understand, when I borrow, ma'am, you can go and borrow money. No, long-term borrowing. What is the big deal? Guys, understand, interest will be there. Pre-closure charges will be there. It is not as you think. You're getting it? You have to plan your cash flows very carefully. Yeah, so I mean, it's not that as we say that, okay, fine, you borrow now, you give it tomorrow to the bank will be happy. No, bank will not be happy. Trust me, bank will not be happy. When you say I will be paying this in 6 months time or 1 year's time, and day after tomorrow I'm going and paying this money, bank will not be happy. And loan processing is not easy as you think. I have to pass a resolution, I have to give the board resolution to the bank, I have to get all my authorized signatory, everybody should sign it, then the papers will go to the bank. Guys, it's not like you and me borrowing, because company is borrowing. You're getting it? If a company needs to borrow, there are so many procedures that they have to follow as per Companies Act. The CS has to first frame the BR, board resolution. We have to give that attached letter of request, everything, attach that BR and send it to the bank. Minimum it will take 2 days to credit that funds. But I need right now money. So what I will do is I will engage my banker. I will always have an arrangement on standby. I will say that what is my OD limit. I will ask whenever I am opening a current account with my banker, I'll ask what is my OD limit. Now, banker will say, sir, based on your turnover and everything and assets you have, I can give you 2 crores as your OD limit. So what does it mean? Which means when there is a cash crunch literally, and I need cash on that day, literally I need, but I know that within 2 days or 3 days time, I will be recouping it. I can get that money back. So what I will do, I will go for this OD facility. I will write a check. I will just do withdraw 1 crore and pay the whatever it is. You just pay that. That's it. So here I don't go through this entire cumbersome procedure. So this is the facility available for me to increase my funding capacity. So that's the reason your bank OD, cash credit is similar to that. So bank OD and cash credit both will be coming under financing activity, and it will be a short-term thing. Why? Because the arrangement itself is like that. You are getting it? Hope you got your answer, Ishdeep. All right. Now, underwriters commission. You guys know what is meant by underwriting? Quick, you guys know what is meant by underwriting? Good. Underwriting. Have you heard of this word? Have you heard of this word, underwriting? Come on, Baba. No? Yeah, this spam too. Have you heard of this underwriting? Come on. Agreeing to pay the damage. No? Okay. So these words are in future? No. All right. No. Understand, this is coming, this you will study under Companies Act basically. Nowadays it will be there. Why? Because see, underwriting, maybe you know the it's not for the damage basically. Whenever the company is going for public issue in the sense, last year, Nika came for public issue, IPO, Zomato, correct? So whenever these guys are coming up, so far those guys were unlisted, so far those guys were private company, and now they have gone for, what the heck, 1 minute. Shucks, I think all the comments were deleted. Shucks. One minute, guys. They're deleted. Okay. All right. So now what happens? SEBI has put a rule, and even Companies Act was also told that whenever you guys are going for public issue, make sure that your shares are underwritten. Ma'am, what does it mean? Guys, whenever the company is going for public issue, it is not guaranteed that all their shares will be subscribed. See, if I want to leave all the technical languages, I'm using very simple local language if I want to put it in that way. See, I am coming to you. Okay, I am asking, I have 10,000 shares. Would you like to buy? If you say, yes, I will buy 10,000 shares, no problem. Suppose you say, no, 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 you and all not worth, and your share also it's not worth 10,000 shares and all, I can't buy. I will buy only 5,000 shares. Balance 5,000, you keep it. You are saying like that. But there is a requirement under Companies Act that minimum 90% should be subscribed. Subscribed in the sense bought. Should be sold. Literally means sold. People should buy. You're getting it. 95% were there. So now what happens? You told how much? 5,000. Now when you say only, now I can sell only 5,000. No. Now what shall I do? Companies are clearly told, if you are not able to reach that subscription, if you are not able to sell that much, please you go. Don't sell. Refund all the money. Even that fellow who agreed to buy that 5,000, no, you pay his money and you go back. Within 15 days, you have to pay that money. You have to go back. No issue, nothing. You go home. That's it. If you want to sell 90%, 9,000, 9,500 shares you sell. If you are not able to sell 9,500, go home. This is the rule. So because of that, it becomes a pressure on the companies. I have to be, whether people will be buying, I have to gain the trust, no. Then only people will invest, no, people will be subscribing, no. So what they did, they introduced one intermediary called merchant banker. There is one concept called merchant banker. Okay, don't get too much on that. He is a broker kind. Okay. So what Companies Act and SEBI told is, Baba, there is one broker, merchant banker. Go to him. Ask him the guarantee. If people are not buying minimum that 90%, whatever is left over, he should buy. You are getting it. So when I came to you for 10,000 shares, you said how much? 5,000 shares. You said I will buy 5,000 shares, ma'am. Beyond that, I cannot buy. It is not worth. You are telling. Now, what SEBI is telling, fine. Your subscriber bought 5,000, done. Baki 5,000, ask your merchant banker to take it. Ask your merchant banker to take it. That guarantee is called underwriting. When a merchant banker gives a guarantee that if the issue was not subscribed fully or not subscribed to a minimum extent, then that merchant banker will take up that issue. He himself will buy that issue. That is called underwriting. That concept is called what? Underwriting. For doing that, he will charge some commission. He will charge what? Commission. You are getting it? Summa he will not do. No. That merchant banker, summa he will not do. Oh my goodness, my connection gone, is it? Shucks. Am I there? Am I live? Just say hi. Am I live? Guys, say hi. Am I live? Connection went, is it? I don't know whether I'm there or not. I'm just continuing. Just type a message if I'm there. I think I'm there. It is connection is restored, I believe. All right. Now coming back. So such things are called. Yes. Hi, Om. Correct. I am there. All right. So that such activity is called under. I don't know where the net which part you guys left. I don't know. All right, so such thing is called underwriting. So when a merchant banker agrees or guarantees that in case of lesser subscription or in case of the subscription was not fully subscribed, the issue was not fully subscribed, he will take up the balance. All right, so that guarantee he will give. Okay, so now it is a mandate. Now 100% you have to underwrite. 100% you have to underwrite. If your shares are fully subscribed by the people, this guy no need to take up anything. He will just take commission. He will go home. You're getting it? That merchant banker. Suppose ulta palta public didn't respond well and your issue is not going well, then obviously that fellow has to take up. That is a different scenario. You're getting it? So for doing that, he will charge a commission. Free of cost he will not do, he will charge a commission. So that is called underwriting commission. Now tell me, because of what activity this one is happening? You wanted to raise funds. You wanted to raise what? Funds. You're getting it? So where this underwriting commission is happening because of fundraising activity. So which under which category you will be parking it in? I will be putting it under financing activity. You are getting it? You hope you guys got a clear idea. Now I circled a few things: income tax, refund of income tax, all these things are operational. You can keep that as a note. Here, leave it open as of now. I will do this in the next class, because when I am doing operating activities elaborately, at that point I will be explaining why these things will be coming under operational activities. You're getting it? Because when I talk about income tax paid, I have to talk about provision. All right, so now provision I don't want to touch. We will do it little later. You're getting it? Now question time. All right, cash flow statement provides relevant information regarding company's liquidity, quality of earnings, solvency. All of the above, none of the above. What is the answer? Obviously, it is all of the above. Why? Because, again, there is a time lag, is it? Shucks, man. All right, so the answer is all of the above. All right, cash flow, ma'am, will it help to understand liquidity? Of course, yes. Of course, yes. I can see whether my operational activity is having a positive outflow, a positive cash flow or not. Because there comes my working capital, changes in my working capital, which helps me to understand. And of course, quality of earnings, from where I'm generating funds. Is it by operational, or is it by selling the assets, or always raising funds, or how? You're getting it? So everything, cash, by looking at my cash flow, I can say, am I really generating cash, or am I burning the cash? You're burning in the sense, am I way too spending more than generating revenue? I am spending. That is called burning cash. You're getting it? All right. Nowadays we use these kind of languages. That's the reason I used it. All right. Now coming back. While preparing cash flow statement, conversion of debenture to preference share capital. All right. Here is this question is interesting. I had debentures. There is some instrument called convertible debentures or convertible instruments. You would have studied in your Companies Act also. Convertible debentures, in the sense, so long it will be a debenture, but after a certain point of time, I will give option to my debenture holder. You have an option whether you can take back money, or you can convert yourself into equity shares. I will give you shares instead of debentures. That workings will be done according to the agreement or arrangement, whatever that have been agreed earlier. Now tell me, this mere conversion, I'm just converting from debenture to preference. So will it be a cash item? First of all, is it a cash item? That's my question. Is it a cash item? Come on. Suppose you exchange something. Forget about this conversion and all. You exchange without any further additional payment or receipt, whatever it is. You just exchange this pen to this pen. Because say a t-shirt you bought, size is not correct. So you exchanged that. Okay. Now tell me, is there any cash flow there? Cash flow happening? Cash flow happening? Hmm? Come on. No answer? No answer? All right. It's not a cash item. So the answer is C, should not be shown as it is a non-cash transaction. You guys are not answering, so I myself is answering. Next time I will not give MCQs. I'll be keep on explaining concepts. Okay. Now, how many activities are there in the cash flow? Obviously, three: operating, financing, and investment. No need to, even in your sleep, if they ask, you should answer. How many methods are there in preparing cash flow? I don't say method and preparing cash flow. I may say cash flow from operational. There are two methods. One is direct and indirect. You're getting it? Next one. As per accounting standard, AS3 cash includes, it's nothing but cash and cash equivalents. So it includes what and all? Cash in hand, demand deposit and short-term liquid assets, both A and B, cash in hand and fixed deposits. Obviously, fixed deposits I won't say. So the answer is what? C. That is cash and cash equivalents. We know that what and all will be called as cash. First is cash in hand and cash in bank, which is repayable on demand, and all other short-term assets or short-term investments, which is 3 months from the period of investment. Maturity is within 3 months, and there is no much risk in the value. All right, and the realization of its value. So only those items will be considered as cash equivalents. Correct. So the answer is C. Next one, sale of share of XYZ Limited by Mr. A will be shown under. So in A's books, he has sold the shares of XYZ Limited. So for what is it? Sold means, first of all, when he can sell. He purchased earlier. So he purchased those shares. So for Mr. A, this is an investment. So now he is selling it. So obviously it is a cash inflow. So inflow under which activity? Investment activity. Correct. So cash flow from investment activity. All right. Next one. Issue of shares by XYZ Limited will be shown under. Now, XYZ Limited is raising capital, right? Raising funds. Now, which activity will be showing under? Financing activity. Correct. Next one. XYZ books dividend received by XYZ Limited from ABC Limited. You are getting it? Now, please understand, I am a corporate, XYZ. I am receiving dividend. So what activity? I would have invested somewhere, and because of that, I am receiving the dividend. So it will be under investment activity. It is an inflow from investment activity. All right. Depreciation, mark this important. Depreciation is a non-cash item. All right, it doesn't have any cash transaction, so it is a non-cash item. It will be removed from your cash flow. I'll tell you how you have to deal it while I'm doing the operational activity. You're getting it? Next one. All of the following would be included in operating activity except non-cash items. So which one it is? So I have given 4: cash receipt from debtors, cash paid to creditors, income tax paid, interest paid on debentures. So which one will not be included in operating activity would be interest paid on debentures, because interest paid on debentures would be financing activity, not a operational activity. So the answer is interest paid on debentures. Hope you guys are getting it. All right. Now, I am so far we have done with what is it? All your cash flows and the numericals, whatever it is. Now the major stuffs are done. Investing, you know the bifurcation, where what will come, everything you know, done. Now the main thing is the next stuff would be operational activity. Next stuff would be what? Operational activity. You're getting it? Now, when we talk about operational activity, like I said earlier, there are two ways to prepare it. It is not as easy or as direct as, investment or financing. You cannot say that, okay, this, no. There is a way to arrive it. There is a format to arrive it. So we have two methods, direct and indirect. All right. So what and all will come under direct, what and all will come under indirect, we will understand one by one. First of all, before moving on to it, you need to understand few things. Okay. If you've seen in your, financing or whatever it is, mostly you would have seen, mostly you would have seen, non-current items, and very few current items you would have seen. Correct, in financing and investing. But when it comes to current, operational, there is something called working capital. All right, which is nothing but current changes in the working capital. Basically, current assets and current liabilities. You are getting it, current assets and current liabilities. These things are directly related to your operational activity. You need to understand that. All right, ma'am, what is it? Now, there is something called debtor or trade receivable. So, what does it mean? I have sold the goods to Mr. X on credit, which means he didn't pay me yet. He said he will pay after 10 days or 30 days. So now he is a debtor to me. Correct? No, we have seen in the basics. Correct? He is a debtor to me. And why he become a debtor? Because of which activity he has become a debtor? Because I made a sale to him. So what is sale then? Operating activity. Are you getting the link now? So please understand. I mean, this is the way you can remember basically. If you are from a commerce background, or if you are from this one, simply I will say, or working capital changes, all your debtors, trade receivables, whatever it's relating to your current assets and current liabilities, changes in your current asset and current liabilities will be coming under operational activities. I will just finish it, I will go off. You're getting it? Since there are guys who are from engineering background, who are from non-commerce background, so for you it is a easier way to relate it. So I made a sale and that guy didn't pay me money, so he become a debtor to me. No, because of what he become a debtor? Because of the operating. So any changes happening in that debtor will be coming under which activity? Operational activity. I'll come to that, whether it is outflow or inflow, how to plus minus, I will tell that. All right. Understand this now. The same way, I purchased goods on credit. This interest paid on question was asked by somebody in the class today, no, that right? So I purchased goods on credit from Mr. X. I told Baba, I will pay you in 30 days time. Give me some time. So now what happens in my book? I have to write, because the accounting is always double entry. So purchases I will write. I didn't pay yet. So what will I do? I will put Mr. X name. I have to pay him. So why I have to pay him? Because I purchased goods. You are getting it? So purchases will be coming under what? Operating. Correct? No. So this guy will be coming under what? Creditor. Creditor in the sense trade payables, or creditors, whatever it's, supplier, whatever. So now the changes in this fellow will be coming under which activity? Anything I paid to this fellow, then that would be coming under which activity? Operational activity. Are you getting the point? This is how you have to give a relationship between, various